Tokyo, Reuters, Asian shares bounced from two-month lows on Thursday as world equities recovered from a sell-off triggered by escalating Sino-U.S. trade tensions, with investors hoping a full-blown trade war between the world and Euro trademark's two biggest economies can be averted. Sentiment was lifted as the United States expressed willingness to negotiate a resolution to the trade fight after the proposed U.S. tariffs on $50 billion in Chinese goods prompted a quick response from Beijing that it would retaliate by targeting key American imports. MSCI's broadest index of Asia-Pacific shares outside Japan. MIUP J0000 plus rose 0.2%, a day after it hit its lowest level in almost 2 months. Japan's Nikkei.N225 gained 1.2%. Markets in mainland China, and those in Hong Kong and Taiwan, are closed on Thursday. On Wall Street on Wednesday, the S&P 500. SPX gained 1.16% and the Nasdaq Composite. IXIC added 1.45%, clawing back heavy losses of more than 1.5% right from earlier in the U.S. session. I think that the substance of trade restrictions and their real impact will be far less than the headlines, said Jeffrey Becker, chairman and CEO at Jennison Associates in New York. EU.S. And Chinese cross-border trade has grown significantly over the last decade, and economic interdependence runs very deep, deeper than the actual trade numbers. And both countries have a lot to lose by escalating trade war. Many investors viewed U.S. President Donald Trump Euro trademark's latest tariffs plan as a part of his negotiation strategy, rather than his final policy. Indeed, Trump Euro trademark's top economic advisor, Larry Kudlow, when asked whether the latest U.S. tariffs plan may never go into effect and may be a negotiating tactic, told reporters, Euro trademark's possible. Euro trademark's part of the process. He called the announcements by the two countries mere opening proposals. The trade actions will not be carried out immediately, giving the two countries room for maneuver. The proposed 25% U.S. tariffs on some 1,300 industrial technology, transport, and medical products from China now see a public comment and consultation period that is expected to last around 2 months. Our view on the China-U.S. trade situation is that typically, the initial headline is worse than what we expect the implementation of ultimately turn out to be. So our expectation is it will remain tense situation but will not break out into an all-out trade war. Said Lillard, Chief Investment Officer at PGIM Fixed Income in Newark, New Jersey. Optimists also argued that the global economy is currently running so strong that it could cope with the impact of the proposed tariffs, which cover a fraction on the world Euro trademark's trade. Yet others also cautioned that uncertainties caused by fears of a trade war could keep many companies from capital expenditures in the near term. Concerns about trade wars could also hit some specific assets, such as U.S. soybeans SC1 and corn CC1, which fell 2.2% and 1.9% respectively on Wednesday after China readied tariffs against them. Oil prices bounced back in tandem with global share prices, and on a surprise draw in U.S. crude stockpiles. U.S. crude futures CLC1 traded at $63.71 per barrel, up 0.5%. In the currency market, the recovery in risk appetite helped to boost the dollar against the yen. The U.S. currency changed hands at 106.76 yen JPY equals, near last week's high of 107.015. The euro equals traded at $1.2286, off Tuesday's 2-week low of $1.2254. The Canadian dollar CAD equals D4 hit 5-week high of 1.2758 Cordobas per US dollar, boosted by optimism on a NAFTA trade deal.